It's time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
So yes, this question came in from Alan, and he says, I know there is a lot of work underway on new battery technology. I was surprised to hear about all the various elements that are under consideration. One development underway has caught my attention, and that is the Graphene Manufacturing Group, GMG, on the TSX Venture. Could your staff look at this stock? So yes, we can. Graphene Manufacturing Group, GMG, on the TSX Venture. Currently trading at a price of $2.30 and has a market cap of about $194 million. So the company is an Australian-based company involved in the production of graphene used primarily in paints, coolants, and lubricants, targeting to improve energy efficiency. As well, they are starting to look into the next generation of battery technology with graphene or graphite. So its clean technology solutions and energy storage products are enabled by graphene, manufactured in-house via a proprietary production process, which essentially decomposes natural gas into its elements and produces high-quality, low-cost, scalable, tunable, and low to no contaminate graphene. So essentially, the company has two segments here. So in the energy saving segment, the company is focused on its Thermal XR, which is a graphene enhanced HVAC-R coating, essentially is an energy saving paint. And from my understanding right now, this is where all of the current revenue is coming from. Now, they also have their G lubricant, which is in development and is a graphene enhanced lubricant additive that seeks to reduce fuel consumption and carbon emissions by reducing internal friction in energies. And right now, a formalized trial is being developed jointly with Rio Tinto to build the business case for adoption of G lubricant into Rio Tinto mining operations. Who knows if that'll ever happen, though. And then as well, they also have in development their G Coolant, which is a graphene-enhanced engine coolant that seeks to improve the thermal efficiency of engines. So their other segment is the energy storage segment. And GMG and the University of Queensland in Australia are essentially working collaboratively with financial support from the Australian government to progress further research and development and commercialization of graphene aluminum ion batteries, including a coin cell as well as a pouch cell battery. And as of right now, GMG can develop and test its own in coin cell and pouch cell graphene aluminum battery or batteries in-house. But it's still a little bit ways from development, and the company is working on a strategic roadmap to the commercialization of these batteries, essentially. So there was some recent operational updates. So the first was on December 12th of 2022, and they provided an update essentially that the board has approved an additional $600,000 Australian in capital to accelerate the progress of their semi-automatic pouch cell prototype production in the Battery Development Center. And this additional equipment is expected to be operational in Q2 of 2023. On December 1st, the company closed a $5.7 million bought deal at an issue price of about $2.75. And the company intends to use the net proceeds of the offering for growth initiatives, working capital, and general corporate purposes. And then on October 11th, the company provided the latest progress and performance update on its graphene aluminum ion battery technology being developed by the company. And you can look at, the results here. I'd go into them, but really, they are over my head, and I won't even pretend to understand exactly, the results here. So looking longer term looking at their medium term, essentially, the company is focused on transitioning from R&D to commercialization of the graphene aluminum ion batteries. As well, the company will continue to invest in new product development and graphene enhanced lubricants. So finally, let's take a look at the financials. So all of these are in Australian dollars. So as you can see, in the last quarter, Q1 of 2023, revenue was up substantially from a low base to 230,000. Adjusted EBITDA was a loss of 2.6 million. As well, we saw adjusted earnings at a loss and GAAP EPS at a loss as well, which isn't good. And looking at the balance sheet, they had about 8.4 million in cash with no debt. But keep in mind, this does not include the most recent equity raise of 5.7 million. So to conclude, for us, Graphene Manufacturing Group is just too early for an investment. There is potential, but in my opinion, the company hasn't moved from a concept to a business yet. Again, there remains potential, but it is definitely speculative potential at this point in time, considering the lack of revenue, profitability, and the need for additional R&D to prove out its G lubricant and graphene aluminum ion battery. So, we'll monitor the progress here on their products, but right now we would avoid the stock entirely.
Yeah, 250,000 in revenue in the last quarter, and they have a market cap of what did you say? 187.
It was 194 million.
194 million. So that's what their market cap is. I mean, it's fine. That's just pure speculation on what this company can achieve in the future. There's nothing really there in terms of revenues right now. I mean, just a juxtaposition. I'm not saying these companies are comparable at all, but we talked about another small cap, Geodrill, today, which has seen its share price rise 100% over the last year. Well, its market cap is 164 million. I mean, the company did 185 million, I think, in trailing revenues over the past year. It'll do around 40 million in EBITDA this year, and you're paying less for that company significantly. Like, it's not even comparable. I mean, there's no earnings, no cash flow, no dividend, and for the graphene company, it's a concept right now. Maybe it will do well. If you have 15 to 25 concept stocks like graphene in your portfolio, good luck over the next 5 to 10 years. You will do terribly. I'm not saying that graphene will do terribly, but if that is your criteria and you look at these individual stocks like that, but if you put in 15 to 25 companies with good cash flow, good earnings, good revenues, trading at reasonable valuations, you have a fighting chance to beat the market over that time. You don't if this is the type of company that you, or the profile of business, not necessarily this company in general, but the profile of business that you put in your portfolio, you're not going to do well over the long term.